Hey everybody, Rick Mount with VIP Independent Mortgage. Happy Friday, September 4th. Can't believe we're in September, back to school, summer's over, and the market is still looking for direction. So we're going to jump right into this week's market update, get you up to speed. Hey, interest rates are relatively flat month over month, but there's been a lot of ups and downs in the middle. You know, last week we talked a little bit about a roller coaster. That's really what the chart looks like. It's looking for direction. What do we say when we mean it's looking for direction? Well, we'll talk about that in a second. But, you know, the mortgage market, the interest rates, man, they're still great. There's a lot of volatility in there, ups, downs. Everybody's kind of worried about where they're headed. But, you know, historically, a great rate on a mortgage is somewhere south of 7%. We've enjoyed a very long run due to downward economic pressures and that stuff over the last few years. So, you know, we've had 30-year fixed rates below 4%, and we're still there. Freddie Mac's reporting the 30-year fixed rates just a hair below 4% with some points and fees. And the conventional loans, the FHA and VA loans, are in the mid to high threes. You know, credit score, loan to value has an impact on those, but we're still trending in a really healthy range. So what do we think is going to happen? That's a question that gets asked all the time. And quite frankly, we just need more consistent data. Every time we get releases, it's a mixed bag. So globally, Europe, China, they have a big impact and things don't look great over there. Domestically, things look okay, but we still have a mixed bag. So payrolls missed the number, but last month's was revised upward. Wage growth has been relatively consistent in growth. It's grown 2% over year, and that's something the Feds are really looking at on whether they're going to raise rates or not and how we're doing. So bond traders want to know whether we're raising rates or not, because bond traders fill their portfolios with a low rate, fixed income, long-term investment, which is a bond or mortgage-backed securities. And they don't want to add to that if they think rates are going to raise. So even over the last couple of weeks, we've had tons of stock market volatility that usually drives rates down. Rates have been flat because the bond traders just don't want to add to their portfolios because they expect a rate hike somewhere in the next 30, 60, 90, 120 days from the Fed. And to them, it doesn't really matter. They're looking 5 to 10 years down. So in the next 30 days to 120 days to them is sort of irrelevant. But that's what's causing the rates to be flat. So, hey, I say we take advantage of it. The most expectations of rates will raise at some point in time. There's a lot going on, but we'll keep you up to speed on that. Lastly, most people do not realize, but you can actually buy a home with as little as 3% down using conventional financing. So great new program, Fannie Mae, Freddie Mac opening up a little bit with some of the down payment requirements. So we can help you understand that. If you'd like a little more information about low down payment programs using conventional financing, give us a call. If not, make it a great week. We look forward to helping you. And check us out on Facebook, our website, YouTube. We're there to help you. Have a great week, everybody.